Of course, this was the meeting back in September where the Fed decided to maintain its forward guidance that rates would likely remain low for a considerable time after the bond buying program ended. But they also, in that meeting, released new economic forecasts showing some Fed policymakers were now starting to think that perhaps rates would be moving higher faster, and that tension is reflected in the minutes from September when they discussed their forward guidance. The minutes say, quote, several participants thought that the current forward guidance regarding the federal funds rate suggested a longer period before liftoff and perhaps also a more gradual increase in the federal funds rate thereafter than they believed was likely to be appropriate given economic and financial conditions. There was a concern the considerable time language could be misunderstood as a commitment as well. Others countered that it was clear that monetary policy was conditioned on the Fed's ongoing assessment of the economy. And there was another argument made at the Fed table that day. In addition, some participants saw the current forward guidance as appropriate in light of risk management considerations, which suggested that it would be prudent to err on the side of patience while awaiting further evidence of sustained progress toward the committee's goals. Now, again, the minutes go on to say that there was another assessment here. They talked as well, Mark, about what should happen to that forward guidance going forward. And there was disagreement on exactly how it should change, other than it should be clarified again going forward. One participant made a suggestion, favored using a numerical threshold based on the inflation outlook as a form of forward guidance. A few participants, however, noted the difficulties associated with expressing forward guidance in terms of numerical thresholds for some set of economic variables. There's again discussion about what might be the best route forward, and it was generally agreed that when changes to the forward guidance become appropriate, they will likely present communication challenges, and that caution will be needed to avoid sending unintended signals about the committee's policy outlook. So, Mark, they were in agreement that it's going to be difficult for them to communicate going forward to the public. A couple other notes from the minutes. They did discuss some potential threats to the economy going forward, the rising dollar for one, also weaker economic growth in other parts of the world, including Europe. And they did talk as well, Mark, about their exit strategy and the possibility of making some changes to the overnight reverse repo facility that they plan to set up as normalization begins. Some of the tweaks there, again, changing some of the numbers here, $30 billion, $10 billion to $30 billion in terms of counterparties, and some of the details there, again, subject to change as they test that program going forward.